Who in the room is a social entrepreneur, by the way? Who's a social entrepreneur? I'm not going to pick on you, but let's just see. Okay. Who sort of studies social entrepreneurship or develops policy for it? Okay. Who's from mainstream business? Okay, good proportion. Who's in the wrong room completely and thought this was a lecture about something else? Yeah, you are, sir. Okay. Feel free to leave. It's okay. So again, I'm very conscious that we have lots of expertise in the room. So let me just give you some remarks. Firstly, then, about why I think social entrepreneurship is interesting and how it represents, I think, a coalescence of a series of things going on globally, in terms of changes to the way we think about the provision of economic and social goods, if you like. I'll give you a sense of, I think, what I think is a really important aspect of social entrepreneurship, which is its hybridity, and I'll come back to that. And then I'll just make a very quick few remarks about social investment, which I spend quite a lot of my time looking at. So the processes by which capital, finance reaches social enterprises and social entrepreneurs, and that emerging market of impact investing, as it's sometimes called. I think it's a very important part of this space. When we observe the world around us, we see a series of very substantial challenges emerging, and challenges for which actually there probably are no easy or simple solutions, or maybe no solutions at all. And these are the idea of wicked problems. They're problems you can only ever solve partially, and you can probably never fully solve. But of course, that doesn't mean you should do nothing about trying to do something to address these major problems. So given we have these wicked problems, well, one of the solutions that people put forward are to come up with clumsy solutions. So wicked problems, clumsy solutions. Solutions that do not resolve the whole set of problems, but which I think can work around some of the key issues involved in wicked problems. And I see social entrepreneurship as being a good set of examples often of clumsy solutions to wicked problems. Partial solutions, but important solutions. Solutions which maybe together can begin to unravel some of these problems if we have several approaches. And I think we should also remember that for all the kind of glamour of the social entrepreneur, hero or heroine, the individual amazing person developing a solution or an organization, there's lots of examples actually of people being entrepreneurial within organizations. This idea of intrapreneurship, people in big corporations, banks, charities, NGOs, whatever, government, who are trying to also be entrepreneurial. So we shouldn't ignore that. So the first set of points there, which are really about the what you might call the privatization of government. So services being increasingly delivered by private organizations on behalf of government, or sometimes instead of government, rather than the center delivering services. There's been a big shift since the 1980s in many developed economies away from centralized provision towards some model of privatization. There's also a set of trends in what you might broadly call the social sector that are moving this way too. And these include examples I've written up here, which would be, for example, the social business model, the social enterprise model. So socially focused organizations trying to make a profit, trying to be a business. That's been clearly driven by difficulties in finding sustainable funding. So organizations that may rely on donations or philanthropy, finding it harder and harder to get sufficient money to do their job in the way they want, and looking to earn income through some sort of business model. That's been a big transition. There's a significant set of trends around kind of sustainable business. This was best known, I suppose, in the 80s around corporate social responsibility, CSR as it's called. I think that model is largely defunct and has developed into more interesting, largely because it was sort of marketing to begin with. So I think that's been replaced with more interesting attempts to reposition the commercial private sector as having a set of social responsibilities which align with its business interests, which of course are going to be much more likely to be successful and powerful. And I'm no critic of business. I work in a business school, right? I don't think business is a bad thing or a good thing. It's a thing that does a certain set of things very well, and some things it does very badly. And we shouldn't expect businesses to be the main provider of social welfare. That's not what they're designed to do. But when providing social goods can align with their business needs, it's a double win. An important part of this was an article published in the Harvard Business Review. Some of you will know this, about creating shared value. This was kind of Michael Porter, the guru of strategy at Harvard, giving his blessing to this sort of new trends that he observed in business towards combining social welfare objectives with profit making. And so this was the idea, for example, that if you treat the partners in your supply chain better rather than historically screwing them to death, over time that might actually be beneficial for your business because they might still be there in 2 years' time providing you with the things you need in your supply chain. Conventionally, we think of the state and the private sector that makes money and civil societies being very different, doing very different things, being defined differently. And these are the things I think that define them differently. So you can pick any of these really to look at. So look at resource strategy. So the kind of community sector, civil society sector often relies on donations, grants, whereas business will rely on conventional financial instruments like debt and equity, and government will rely on taxation largely as its source of income. So very different sources of income. Now what's interesting, I think, in fact, is to think of the lines between each of the corners as being a kind of spectrum of hybridity. So you start over here being pure private commercial sector, but you begin moving along here towards some kind of blend of what these guys traditionally do and what the state does, the public sector does. So kind of in the middle you get the kind of classic public-private partnership where government works with a private organisation that makes money to deliver services. And on the other hand, you've got social enterprises, social businesses that combine the logics of business, normal private sector business, with a social commitment. And in the middle you might have actually blends of all three of those different logics. So it's just trying to say that I think you've got this hybridity, this blurring, that's a key defining factor of social entrepreneurship. They don't see themselves just as businesses, just as charities, just as government, but something that embraces parts of all of those different sectors. We got all caught up, as I mentioned before, in defining this thing. We got very excited about, can we define social entrepreneurship as some special new thing? And then we had a kind of reality check, which is like, well, whatever you define and how excited you get about these rather abstract discussions, on the ground, the most important thing social entrepreneurs need are resources. You can't actually start and grow and maintain organizations or projects unless you have some resources. Sometimes that might be volunteers and kind of free pro bono resources, but often it's some sort of money. And so we began to realize that actually there were many more interesting questions to be asked about how do we find resources for these guys and men and women and projects. Because solving that problem may be the most important problem to try to solve to grow and expand this space. So that's really why a lot of my work shifted into social finance in the last 5 or 6 years, because I think it's one of the key issues. Now, to any conventional finance guy, that's madness, right? Who invests money to lose it all? At least deliberately. Lots of people invest money and lose it all, but not deliberately, right? But in this space, that's fine. People accept that. So that's the kind of grants on the left-hand side. And we go right up in this space to the right-hand side where you might be able to invest for a social good and produce financial returns superior to the market. So there are situations where you can invest in this space and make more money than you would if you were putting it in a conventional fund or portfolio. So imagine if you have a project that can only return 1% on investment, and you want to get commercial finance in there that wants 8%, so you think that's not going to happen. But it can happen if you can include people who are prepared to take minus 7% on their return. In other words, the people who are prepared to take a financial loss for a social benefit can underwrite or subsidize people who want a higher financial return. Forgive me if I'm kind of losing you here, but the point is you can structure deals in this space in really interesting ways that are completely impossible in mainstream finance. That to me is also very exciting and is happening out there right now as we speak. These deals are being done, we study them. When I stepped onto, let's take the analogy forward. When I stepped onto this ship, social entrepreneurship, 10 years ago, I was the first person on it. I'm pretty much sure now it wasn't the Titanic, right? It hasn't sunk. This field, which I think could have been a flash in the pan 10 years ago, was not clear it was actually going to be anything more than a fad, is now well institutionalized. There's lots of activity around the world, lots of analysis, big initiatives like the G8's interest in social investment that suggest to me that whatever whatever else may be the case with social enterprise, and it's by no means perfect, it's going to be here, it's going to be around, it's going to grow and be more important in the way we look at the world going forward. And it may just be that it does help us unravel some of these really crippling, wicked problems that we all face. So I'll stop there. Thank you.
Social finance is sort of growing, and there's a growing number of owners of capital who are sort of seeking to invest in social enterprise. And they're obviously motivated to sort of generate social values, not only profit or maximize returns. So my question really is to you, and can these sort of ethical investments or social investments, can they actually sit alongside current financial markets?
Their interest in this market is in many ways commercial. So they expect social impact insurance to become its own stream in 10 or 15 years. They do accept that there would need to be a subsidy for it to work really well. And so the capital base for this insurance product is exactly what Professor Nicholls described. If you're familiar with debt financing, there's senior debt, there's junior debt. It's exactly the same way. You have very senior commercial capital sitting there that gets paid out first, but at the very base of it, there is foundation capital that's highly risk tolerant and actually never gets paid out. It just circulates through the system. So there are a few very interesting models that sit side by side, both sit layer on top of commercial models that sit today to enter new markets, or sit side by side with commercial models simply because the returns may not exist. However, the techniques exist, and there's no reason to not leverage them in the nonprofit sector as well.
What sort of relevance does social entrepreneurship have to the informal sector?
It starts from the premise that many of these people who are in the informal economy are not really linked up to the formal economy in any substantial way, and that the big scope in this area is to boost demand. So there's a huge market out there for you. Get in there and sort of give these sort of people services, and they're waiting to sort of lap up these services. I think in many instances, some of this kind of approach actually leads to quite a substantial undermining of the livelihoods of people who do the work in this area.
The bottom of the pyramid market is widely critiqued, you're absolutely right, and I think there are substantial both conceptual and practical problems about the way it's been presented to date. I think the point I'm trying to make is that if you want to encourage the involvement of big corporations, particularly with the poor, this is a convenient way to get that conversation started, and I think we have seen substantial examples where that conversation has led to positive benefit. There are also many examples where it may not have done, and there is always going to be a very real question about exploitation.
One of the challenges for social enterprises is that capacity is not large enough, especially in South Africa, and that networks aren't developed to attract funding and to sort of really deploy large-scale investments.
Yeah, I think the capital formation is one of the critical elements to being able to build a healthy entrepreneurial ecosystem. And to do that, I think if anyone had the silver bullet in terms of the answer, they themselves would probably be contributing to the Bill and Melinda Gates Foundation. But it probably is largely systemic. So if we can find those incredible success stories, build those incredibly high impact businesses, of which we do have a few examples in the South African landscape. I would though like to tie that into this notion of social entrepreneurship, and it's something that I've been grappling with, because I think particularly in the South African context, social entrepreneurship doesn't necessarily have the right stigma. And I almost wonder whether or not it's not a case of social entrepreneurship, but rather an arising of a social consciousness, where consumers, business, and every corporate citizen out there is becoming more responsible in terms of their choices.
How can we bring the economy forward in a way that keeps society in mind and that actively drives, and this is where I might differ from you, that actually drives social impact. So where we're not only looking at wealth creation as an automatic generation for economic growth, but we're looking at the individual businesses looking at more than just their financial returns. And one of these things can be, and there's a lot of overlap, one of these things can be disrupting, for example, an existing value chain, especially in the context of the South African economy, that benefits a small portion of oligopolistic kind of companies, and how can you decentralize production?
And what we usually find is when there are organizations on the ground that don't have arm's length relationships with their beneficiaries, which is a very, very common problem in the social sector, is you tend to have the government financing something, somebody else delivering it, and a third person actually benefiting from it. There is less of a relationship between the person who's delivering and the person who's actually benefiting from it. And you see odd outcomes come out of that. There are organizations that do really well, and those are well-performing nonprofit organizations, but there are a lot of organizations that go astray.
And that is, I think, sort of building on the notion that the ultimate yardstick of social enterprise or social entrepreneurs is the extent to which they would be missed if they're no longer around. So I just want to know from you guys, how do you perceive social value? What is social value to you? How would you explain it? How do you deal with it?
I don't think social enterprise is here to replace traditional NGOs at all. I think there's a space for everything, because you have a very different focus when you work with social enterprises, the way we work with them. So it's about creating a value that goes beyond the business benefit, but that is not contradicting it. I think that's how I would define it.
It should be focused around creating sustainable employment, meaningful employment. And I go back to my point earlier on. If every person in society was given the opportunity to have a meaningful job, through that access to finance, they then have the choice to have access to better healthcare, to better education. And so as a consequence of just that one bit, employment, the knock-on effects are astronomical.
When we would look at it, we'd see it as being something you determine by a particular set of principles. And those principles are around process, much more than about outcome. So what do I mean by that? I mean that to establish social value, you need to begin by thinking carefully about the populations you are intending to benefit. And having thought that through, that's pretty much the last time you have involvement directly, because you then go out and ask them what would be the beneficial effects of the thing you want to do, and indeed what you should be doing to benefit them and in what ways. And having established that, you then ask them to tell you how best to measure it, and you then ask them to measure it, and then you ask them to comment on what you think you have done. And I think the process is the critical point here, and it's based on principles. And the principles are about respect and participation and listening. Not talking, but listening.
Basically, all of our economic activities involve some amount of social relations. That the sort of basics of an economic engagement involves some sort of social relations, and I think you could think about all sorts of sort of different types of social value that would come out of that.
But as we started having conversations across the investor the social impact investor landscape, there wasn't one definition of value. It was, it was probably the same 5 or 10 themes that you see, but very different emphasis across the board, ranging from number of jobs created to something that maybe sound a little bit more for profit is whoever grows revenue, whoever grows has the best margins, whoever pays and treats their people well, and so. A lot of different definitions, and I'm not sure there's anything wrong with that. I think an ecosystem of definitions is probably fine.
Absolutely, and I totally agree with that. And ladies and gentlemen, in closing, I'm certainly going to try and summarize the many opinions that have been expressed. And I think perhaps the best way to do it is to quote one of the great philanthropists of the last century, Andrew Carnegie, and he said it's more difficult to actually give money away intelligently than it is to earn it in the first place. And I think that's the social entrepreneurs. That's what they need to think about. How do they use the wealth that others have created efficiently and effectively in a manner that actually maximizes social impact? And I think, Jeff Skoll, the foundation that you come from, he also said it's not a passive vehicle for redistributing wealth either, but it's an active means of empowering those who can bring about social change.